Is Dutch Bros better than Starbucks? At what prices should we buy Bros? Let's talk about that. This is a fight between two coffee houses, still within restaurant stocks, Starbucks and Dutch Bros. Let's look into Bros stock to see what prices we should buy the stock. Bros is currently trading at $35.72 with market cap of 5.85 billion. Bros came public on September 15, 2021 with open price of 32.5. This is Bros financials. This is the price and this is the market cap. I like to deconstruct my revenues into three components, namely COGS or cost of revenues, OE or operating expenses, and the net income. I don't use the operating margins and the gross margins. Everything here is in billions except the EPS and margins, of course. This is their revenues year over year, and this is the rate of growth of their revenues. This is the COGS or cost of revenues year over year, and the margins with respect to revenues. I'll show you the relationship of the sales. With the current numbers here, it eats around 60 to 70% of their revenues. Remember, this could go lower as time goes by, and this could go higher as well, depending on how the company sees spending fit. This is the operating expenses of Bros and the margins of OE with respect to their revenues. With these current numbers, it eats about 25 to 50% of their revenues. If you add these two here, you should get the remaining of the 100% as their net income. But obviously, these expenses are high and well above 100, leaving them with negative net income. Free cash flow is negative. They're burning cash. About their cash position, very small position. Their debt levels are also small and quite manageable. Normally, I'd pass on stocks like this. It's not worth looking more into the company. This is why I think Warren Buffett don't like buying companies at their IPOs. As investors, you want solid numbers, financials you can depend on, so you can put valuation on the company. Now, with these numbers, I really can't give you any price target because I can't make sense of their financials yet. But if it were the same with SBUX, margin wise, SBUX has margins of 10 to 16%. Net income margin and or free cash flow margins. If Bros could make those same margins, again, I'm not saying they will, but maybe they can exceed these numbers or maybe not. I could pay for Bros starting from $10 up to $16 because remember, I pay 1 PE or less for 1% of their margins. That's assuming 1 EPS for the stock. With this net income, and of course, I still see them diluting more of their shares into the future, 1 EPS is a very high assumption for Bros at these current numbers. But again, I can't give you an EPS for this stock. Now, what do I think of Bros? I think Bros is like SBUX. They're growth stocks with high growth expectations, trading at high multiples. Simple terms, overvalued. I don't pay for growth. I don't bet on the future. I pay the right price at the current market situation. The question now is, which is the better buy? Starbucks or Bros? I mean, both stocks are overvalued and I don't recommend putting money on either of them. I screened SBUX and I gave you my best entry prices for the stock, so you might want to check that one out. But if you were to ask me, I think I'd rather put my money on SBUX. One, because they're profitable. It's almost a guarantee that you'll get your money back sometime in the future, unlike Bros. It's speculative, it's a trader's market. The reason behind this price movements could be anything. Profit taking, multiple compression, markets not liking growth stocks anymore. I mean, no real value for the stock yet. Number two is the moat. I mean, I myself haven't seen a single Bros outlet. I've seen a lot of Starbucks though, so I'd rather choose something I know, like a Starbucks. So yeah, I think it's an easy answer. SBUX over Bros.